NIO, better known as the Chinese Tesla, has now a bigger market cap than General Motors and BMW. But market capitalization is just the price of each share times the total number of shares investors are holding. The question is, can NIO deliver on its expectations? On the Fool.com, the Motley Fool, NIO's market cap just passed General Motors. Can it live up to its valuation? Could this fast grower be China's answer to Tesla? It's been a November to remember for NIO. The Chinese electric car maker just hit 3 big milestones in 2 days. On November 2nd, its market cap surpassed that of German automaker BMW. The very next day, its market cap not only crossed the $50 billion mark, but also surpassed that of General Motors. That's impressive to be sure, but is it justified? Here's what investors need to know about NIO's potential and why it could be the next Tesla. Growing fast, NIO has benefited from a lot of hype around the electric vehicle industry. Splashy stock market debuts from companies like Nikola have generated a buying frenzy among EV investors. It's tempting to lump NIO into the same class as startups like Nikola and Lordstown Motors, but there are a few key differences. NIO went public in late 2018, well before the current wave of electric car IPOs. Unlike Nikola and Lordstown, NIO is already producing electric vehicles. Taking a page from Tesla's playbook, NIO started with a sports car in 2016 and then quickly transitioned into specializing in electric SUVs, including 2017's full-size ES8, 2019's mid-size ES6, and 2020's EC6 coupe SUV, essentially a crossover SUV. In October, NIO produced and delivered more than 5,000 vehicles in 1 month for the first time in its history, more than double its October 2019 output. Of course, that pales in comparison to the likes of General Motors, which sold more than 600,000 vehicles per month in 2019. Even the comparatively small-scale Tesla delivered more than 48,000 vehicles per month in Q3 2020. So, although NIO is currently growing by leaps and bounds, it has a long way to go to justify its current valuation. The Tesla connection. Analysts have been questioning the lofty valuation of Tesla, currently the world's largest automaker by market cap, for years. While I'm wary of calling NIO the next Tesla, the company certainly has some similarities with its larger US rival that could bode well for its future. Much like Tesla, NIO has chosen to focus on a handful of models. Tesla got its Model S sports coupe production up and running before it moved to the Model X and eventually the Model 3. Similarly, NIO has gone all in on electric SUVs, an underrepresented segment of the EV market, and is only now branching out onto other models including the ET7 and ET5 sedans and the EF9 minivan, all slated to debut in 2022. NIO's financials also look similar to early-stage Teslas. Revenue is increasing at a rapid clip, and while the company's net income is still negative, it's showing gradual improvement. However, the company's debt load is also increasing quickly. It's worth remembering that Tesla didn't post consecutive quarterly profits until 2018, and its debt load finally peaked, at least for now, at about $13.4 billion at the beginning of this year. NIO investors should expect a long wait before the company achieves profitability. All eyes on China. Thus far, Tesla via its Shanghai Gigafactory has dominated the Chinese electric vehicle market. However, it's reasonable to expect that the Chinese government will favor domestic EV manufacturers like NIO over foreign companies like Tesla. That could be NIO's secret ace in the hole. The Chinese automaker is already the largest in the world, and its EV market alone is expected to be worth more than $800 billion by 2027. NIO buyers in China receive generous subsidies, so while the base price of the company's EC6 is about $56,000, subsidies can reduce that to about $42,500. Meanwhile, the comparable Tesla Model Y sells for about $74,000 and isn't eligible for those subsidies due to its higher cost. General Motors sales, though, currently dwarf both Tesla's and NIO's. GM sold more than 3 million vehicles in China in 2019. By contrast, Tesla is on track to sell about 150,000 Model 3s in China in 2020. Even with potential favorable treatment from the Chinese government, NIO has a lot of ground to make up here. Hot or not, NIO certainly has the potential to live up to its lofty valuation. It operates in an underserved niche in a rapidly expanding market where it has a home court advantage. However, it's starting from scratch while its bigger and wealthier rivals are building on existing brand recognition and manufacturing expertise. Ultimately, NIO is a promising but speculative player in the emerging electric vehicle market. Investors who can stomach the risk may want to take a chance on the company, but they should be aware that it will take time before the company can prove itself successful, if ever. NIO has potential, and there is a market thirst for electric vehicles. NIO only needs to get a few things right. NIO is playing from home. And by no means China is famous for playing fair, especially with foreigners. And not even to mention that this foreigner is an American Tesla. I already have a small position on NIO. I see a lot of speculation going around, but I see at the end of the day some money that could potentially be made here. Have you already bought it? Are you considering buying it more now? Or are you considering selling it since it has now hit these high valuations? Let us know in the comment section down below. Also, please do drop a like, and if you're new here, subscribe and hit the bell.